This is our discussion of letters for underwriters, also certain other requesting parties as we will see along the way. The material that we have here comes from Auditing section clarified 920. So what are we talking about with an underwriter? Well, first of all, you may have heard the term underwriter when it comes to insurance. We're not going to talk about that type of underwriter today. Instead, the type of underwriter that we will talk about will be one who sells stock and bonds. You can think of an underwriter rather like a retailer. The underwriter buys the stock and the bonds from the company issuing them, rather like a retailer buys inventory from some type of wholesaler or some type of manufacturer. So when it comes to the underwriter will buy this inventory, if you will, of securities from the company issuing them, and then will resell them. Obviously, the underwriter hopes that the resale price will exceed the cost. And the difference there, instead of gross profit, is called the underwriting spread. In other words, the price at which the underwriter sells them minus the underwriter's cost. But the underwriting spread can quickly turn negative. So that's one of the reasons why an underwriter may want a special type of letter from a CPA. And that's what we will discuss today. Two other reasons why an underwriter may wish to have this type of letter is to continue minimizing its risk, and especially because the underwriter does sell these securities and could be liable from those to whom they have sold them. So there's a great deal of civil liability, in other words, under torts. Also, the underwriter faces possible statutory liability under the Securities Act of 1934. Under the Securities Act of 1934, which was one of the two acts establishing the SEC, the underwriter was cited as a type of expert. So an expert does have statutory or criminal, if you will, liability under the Securities Act of 34. By the way, the auditor is also a type of expert and also can face statutory liability here. So the underwriter may want to get this special letter that we will discuss, often called a comfort letter, from a CPA to help mitigate the underwriter's liability. But as a CPA, we must be very careful about what we do and do not say, because the underwriter could be trying to shift responsibility and liability over to us. We don't want that. So this section is going to urge us to be careful about what we do and do not say. By the way, the world's largest underwriter is a name which will be familiar to you, and that is Goldman Sachs. So let's see a little introduction here. By the way, the handout that I have here on the screen will be found on the portal. So if we look at the introduction, we see that this section provides guidance to accountants for performing and reporting on the results of engagements to issue letters for underwriters and certain other requesting parties. Again, these are commonly called comfort letters. By the way, the company which is issuing the securities must have been audited, but not necessarily by us. So another accountant could come in and do this engagement of writing a letter for an underwriter, but that's very rare. Usually we have been the auditor. We have now been asked to write this special comfort letter. And by the way, generally auditors are very eager to do so because comfort letters are quite profitable, even though they could open ourselves up to some risk if we're not careful. So again, this section provides underwriters, among others, can be liable if any part of the registration statement contains material omissions or misstatements. Again, that underwriter is an expert. So the underwriter has a so-called due diligence responsibility to make sure that everything in the registration statement, which was filed with the SEC to issue the securities, is accurate. Everything is in it, no omissions, no misstatements. Now, by the way, comfort letters are not required by the SEC, but underwriters commonly request them to limit the risk. These are never filed with the SEC. If that happened, that would certainly increase our liability. We don't want that. Now, applicability, what this statute, or what this section rather, applies to. Well, accountants may provide a comfort letter to underwriters or to other parties with a statutory due diligence defense. In other words, they have to make sure that everything with securities is okay. In connection with financial statements and financial statement schedules, including registration statements filed with the SEC. And a comfort letter may be addressed to parties with statutory due diligence defense, like a broker-dealer, which is the next step under an underwriter. They also buy and sell securities, but from an underwriter, or other financial intermediaries, like an institutional investor or a mutual fund. So other than a named underwriter, we can only do this only when a law firm or attorney for the requesting party issues a written opinion to the accountant that states that such a party has a due diligence defense. This is called a representation letter. So in C, we see that the broker, dealer, or other financial intermediary must furnish that accountant with a representation letter, and I'm not too worried about the contents of that. So we can always issue a comfort letter to an underwriter, but to anyone else only if they give us a representation letter. That again limits our liability as the CPA. Now, looking at some general things here. Well, the services of an independent accountant include audits of financial statements and financial statement schedules included or incorporated by reference in registration statements filed with the SEC, like Form 10K. And in being much of the uncertainty and consequent risk of misunderstanding with regard to the nature and scope of comfort letters has arisen from a lack of recognition of the necessarily limited nature of the comments that an accountant can properly make with respect to financial information. Now, registration statement or some other offering that has not been audited in accordance with GAS and accordingly is not covered by his or her opinion. What that means is that anything that is not directly derived from an audited financial statement, we have to be very careful what we say on it. And with coming on down with the skip C, coming to the limitations. Well, first of all, an independent accountant can properly comment in his or her professional capacity only on matters to which his or her professional expertise, is substantially relevant. So we can only comment on things which are somehow within our purview. Not everything may be financial, but things are related to financial statements or to our expertise in one way or another. Anything beyond that, we cannot say anything. 3 things we can never comment on, and I've mentioned this before, but one is the competence of a party such as management. Never. Another thing is to give a legal conclusion. We can never give a legal conclusion. And then third, we can never vouch for the achievability of something such as a financial forecast or a budget. Now, procedures short of an audit, such as those contemplated in a comfort letter, provide the accountant with a basis for expressing at the most negative assurance. Here's what we will see. We will see that regarding audited financial statements or something very closely derived from them, we can express positive assurance in a comfort letter. So in our opinion, this information is okay, it's fairly stated. But if there is information which is within our expertise, but it falls outside audited financial statements, at most we can give negative assurance on it. That is less far-reaching than the opinion or positive assurance we can give about audited information. So instead of saying the positive assurance, in our opinion, we believe this information is okay, at most we can give negative assurance on anything beyond financial statements, audited financials, or something derived from them. So on other information, the best we can do is negative assurance to say that nothing came to our attention to indicate that something is not okay. So that negative assurance, sometimes called limited assurance. And if something is beyond our expertise, we can give no assurance on it whatsoever. So do know those 3 levels of assurance. positive or an opinion, negative or limited, and no assurance. Now, coming on down to E. The account should suggest the underwriter that they should meet together with the client to discuss procedures to be followed in connection with the comfort letter. And during this meeting, the account may describe procedures which are frequently followed. But in F, because the underwriter will expect the account to furnish a comfort letter of a scope to be specified in the underwriting agreement, a draft of the agreement should be furnished to the accountant so he or she can indicate whether he or she will be able to furnish a letter in acceptable form. And the accountant can also provide a draft of the comfort letter he or she expects to issue. However, the accountant should let the underwriter decide on the sufficiency of the material in the comfort letter. That last sentence is very important. The underwriter always decides that. The accountant does not. If we did as an accountant, that would again increase our liability exposure, which we don't want. Let's see, guidance on the format and contents of comfort letters. So here are some things that we should know. First of all, number one, the independence of the accountant. We always say that we're independent. Now, number two, we'll see this positive assurance again. If the accountant has audited the financial statements, which we will practically, may also give positive assurance on whether the audited financial statements and financial statement schedules included in the registration statement compliance to form in all material respects with the applicable accounting requirements and the related published rules and regulations of the SEC. So again, positive assurance on audited financial statements or something derived closely from them. Then number three, here's negative assurance once again. So to reinforce what I said just a bit ago, the accountant may only give negative assurance on unaudited financial statements or anything else, I'm not worried about all these things here, that will somehow fall under the accountant's expertise. Once again, if there's something that falls outside the accountant's expertise, the accountant gives no assurance. Let's see, I can skip through most of the rest of this, I think. Let me just verify as I go through. Dating, you should know the letters usually dated on or shortly before the effective date of the filing. So whatever documents filed with the SEC, we try to have our comfort letter extend all the way to that date. C, the addressee should not be addressed or given to any parties other than to the client and the named underwriters or other parties. And E, of course, independence. We are independent. So this has a little bit more detail than we need, as you see as I'm coming down. And I, if anything else happens later on, disclosure of subsequently discovered matters. We need to discuss that with clients so the consideration can be given as to whether disclosure should be made in the registration statement. Then, you will not have any questions from the book or on my accounting lab, but I do have just a few review questions for you here, and you don't need to turn them in whatsoever, but just for your own clarification. I do have a handout on the portal which has solutions to these, but I would like to go over these with you now. If you would rather do the questions on your own and pause the video and then come back and listen to the solutions, certainly feel free. So first of all, on number one, an accountant can issue a comfort letter when which of the following conditions is met? The answer is B. Received a representation letter from a broker-dealer or other financial intermediary. The reason is, since this is not one of the underwriters, they have to give us a comfort letter, or they have to give us a representation letter before we can give them a comfort letter. Again, to limit our liability. Number two, a comfort letter should state which of the following facts. It is A, the accountant is independent. Then number three, a comfort letter is ordinarily addressed to whom? Obviously, do not go for A, the SEC. These are never filed with the SEC. So in C, could be addressed to a broker-dealer or other financial intermediary, as long as they give us a comfort letter. And of course, always addressed to an underwriter, even if they do not, because we know they need it. Then number four, Comfort letters ordinarily signed by, well, it would be A, the independent accountants, because we are the one issuing the comfort letter. Then number 5. When an accountant issues a comfort letter to an underwriter, which contains comments on data that have not been audited, the underwriter most likely will receive B, negative assurance on anything else such as capsule information. I'm not concerned about what that is. Then number 6, which of the following matters is covered in a typical comfort letter? That would be D, an opinion as to whether the audited financial statements comply in form with the accounting requirements of the SEC. Please let me know if you have any questions.